Welcome to Salusion's Guide to QSEHRAs. In this video, you'll learn how to create and administer a QSEHRA effectively. The video is divided into 4 sections. The first section offers an overview of QSEHRAs and covers the key considerations for implementing a QSEHRA compliantly. The second section demonstrates how to create a QSEHRA with Salusion. As you'll see, it is straightforward and can be done in less than 15 minutes. The third section explains how to administer the QSEHRA. The final section describes the QSEHRA from the employee's perspective. Let's get started. QSEHRAs are health plans that enable employers to reimburse employees' medical expenses with non-taxable dollars. Tax-advantaged programs inherently include regulations. Here are the essential aspects of a QSEHRA that you need to know to ensure its compliant administration. QSEHRAs have a uniformity requirement, stating all employees are eligible and must participate in the QSEHRA on the same terms and conditions, unless they belong to an excluded group. Excluded groups encompass 6 categories of employees, and the employer has discretion which groups to exclude from their QSEHRA. Sole proprietors, partners, and LLC owners are not considered employees and thus cannot participate. However, non-owner family members can. Greater than 2% owners of an S Corp and their families are ineligible, while employee owners of a C Corp are eligible. Before receiving reimbursements, every employee and their family members must show proof of health insurance that provides minimum essential coverage. Here are examples of plans that do and do not qualify as minimum essential coverage. For a medical expense to be eligible for reimbursement, it must meet 3 requirements. First, the expense must be incurred in the plan year. Second, the expense must be for the employee, the employee's spouse, an employee's child who is 26 years old or under, or an employee's tax dependent. Lastly, the QSEHRA can only reimburse medical expenses defined in IRS Code 213D. 213D expenses include premiums and out-of-pocket medical expenses. When setting up the QSEHRA, employers choose which of these expenses to reimburse. There is one type of expense that is taxable. If an employee is covered by insurance that is paid with pre-tax dollars through their spouse's or parent's paycheck, then their premium can be reimbursed, but it will be taxable. Taxable premiums make the administration of QSEHRAs more difficult. Either employers reimburse employees through payroll to capture the tax withholding, or they let Salusion make non-taxable reimbursements and make a one-time payroll adjustment at the end of the year. Salusion will offer you 4 options for eligible expenses. Most companies choose to exclude taxable premiums to simplify the administration of their QSEHRA. With Salusion, allowances are made available in monthly increments and accrue throughout the plan year. When an employee submits an expense, Salusion will approve it that evening, and the expense will enter the queue for reimbursement. If the allowance accrued is greater than the expense, then the full expense amount will be reimbursed. If the expense exceeds the amount of accrued allowance, then the expense will be partially reimbursed and the remainder will be reimbursed automatically when more allowance becomes available. After the plan year ends, employees have 75 calendar days to submit claims for expenses incurred in the previous plan year. Unused allowance from the previous plan year reimburse these expenses. Allowances remaining after the year-end runout are forfeited. After an employee is terminated, they may no longer submit claims for reimbursement. Premium tax credits lower the cost of health insurance purchased through the marketplace. If an employee is eligible for a premium tax credit, a QSEHRA will replace that tax credit on a dollar-for-dollar basis. For example, if an employee receives a $600 a month tax credit and is allocated $200 a month through their QSEHRA, then their tax credit will decrease to $400 a month. The IRS lacks visibility into the allowances provided to employees unless explicitly reported. Hence, it's mandatory to populate their W-2, Box 12, Code FF, reflecting the allowance provided. Employers typically make adjustments to the W-2 in December. Salusion facilitates this process by furnishing a report detailing the yearly allowance for each employee. Now that we are familiar with the rules, let's walk through the setup of QSEHRA. To begin, simply click any of the Start Now links provided on the Salusion website. After inputting information about your company, create the QSEHRA plan. QSEHRAs operate on a plan year. First, define when the plan starts and ends. The initial plan year may be less than 12 months, so that subsequent plan years start and end on desired dates. Next, select the groups of employees to exclude from the QSEHRA. And define the expenses that are eligible for reimbursement. Once eligible expenses are established, the next step is to set the allowance. The allowance can be set to one size fits all. It may vary by the employee's family size, age, or both age and family size. The last step to creating a QSEHRA is to decide how employees are reimbursed. Employers can reimburse employees themselves, aided by a reimbursement report that Salusion makes available every month. Alternatively, most of our clients let Salusion automate reimbursements through ACH. Salusion can either initiate the reimbursement the day after the expense is approved, or aggregate expenses and initiate the ACH reimbursement once a month. Once initiated, the ACH process takes approximately 4 business days to complete. Now that the QSEHRA is created, the next step is to onboard employees that are not in an excluded group. To add an employee to Salusion, click Add Employee. To add multiple employees at one time, download the Excel template, populate it, and click Upload Employees. To remove an employee, click the Terminate button next to the employee's name. Once employees are in Salusion, mark them eligible for the QSEHRA. Next, enter the date that the employee is eligible. The last step to onboarding employees is to send them an invite. That is all that is required to administer a QSEHRA. By opening the menu and clicking Documents and Reports, you have access to real-time data describing your QSEHRA. In the Reports folder you will find monthly and tax reporting. In the Plan Documents folder, you can find a copy of your plan documents and your administrative services agreement. Salusion supports multiple administrators. To add an administrator, open the menu, go to Plan Settings, and click Administrators. If the administrator is an employee of the firm, click Employees and select the employee. If the administrator is not an employee of the firm, click Add External TPA. Next, choose their level of access and send them an invite. Employees will receive an invitation to sign up via email. In the email, they will affirm that they have received the employee notice and summary plan description, which are required by law. Next, they create a login and password with Salusion. Once logged in, they will be asked to provide proof of insurance and to input their banking information so they can be reimbursed. Employees are now ready to submit health claims. The first step is to upload a receipt. They can either upload the receipt to the web application or take a picture of it on their smartphone through the Salusion app. After that, they enter a few basic facts about the expense and click Submit. Salusion approves expenses every evening, and the ACH process can be initiated as quickly as the following day. If an employee or an administrator has any questions, there is a little blue button at the bottom of the screen. There they can either send us an email or schedule a call via Zoom.